Morning, everybody. How are you?
Good morning.
Sound up. So today is about kind of what we have to do as an industry to keep the real estate market moving. And does anybody know who Steve Harney is? Not Harvey, Steve Harney. You ever hear of Keeping Current Matters? Anybody hear of that site?
Sure.
So he's the principal of Keeping Current Matters. Talking about how, as an industry, one of the biggest criticisms that he has is letting others speak for us. And one of the things that he had talked about in a recent podcast was the beliefs of buyers and homeowners. I'm going to ask for volunteer. What do you thinks home prices are going to be doing in the next 1 to 3 years? Out there, crash, right? And that narrative is from the media. They've come up with statistics like foreclosures are up 300% from the
Hey,
year.
Rob, if it's the buyer or the seller, I don't think the prices are going up.
I think it's the eye of the beauty's in the eye of the beholder, right? When they go to buy, are those same sellers afraid that the market value might be a little bit inflated and might crash? It's quite how they can have, they have license to have their own opinion, statistics of consumers and how they feel about the prospect of real estate is what it was in 2010 when the survey started, the big crash. Tends that we're allowing others do the speaking for us. We were to be transparent with our clients and tell them what's going on in the real estate market, house that's even within reason priced and presented. Are you seeing, is anybody on this call having difficulty selling even a high end of reasonable priced home, getting it sold? Getting multiple offers on reasonable homes? Does anybody on this call see any signs or signals that prices will be dropping? And here's an analogy that I love that he said only the media can take the analogy of a housing market that normally goes at 55 miles an hour, that in 2020 and 21 went 110 miles an hour, and now we're back to 70 miles an hour, and say that it's negative. Okay, what they're talking about is the rate of increase has decelerated, but we're still moving forward and probably faster than normal. Does that resonate with anybody?
It's a great analogy, the way you put it. I mean, it kind of crystallizes the whole idea of what happened.
Right. So let's just say, like, in the past 40 years, the housing market's been appreciating at 4.92%. And in the last 2 years, it probably appreciated at 2 to 3 times that, right? So let's just say the housing market's cruising at 5% appreciation. It went all the way up to 15. Now it's slowing back down to 5. The rate of appreciation has decreased, but home prices are still appreciating. Sense. Here's the word that I like, and I borrowed it from Chet Holmes, the ultimate sales machine. And he said that you have a moral obligation to communicate it to the people that use us as their trusted advisors, the accurate information. Okay, it's not a financial interest, it's not a commission check, and we have a moral obligation. Just like a doctor has to, they have more than a monetary obligation. Okay, they're handling people's lives. We have an obligation to tell people the truth and be transparent about what we see. If the public saw what we see every day, I think they'd have a different opinion on what's going on. He also put something quite simply. He just said, up and down markets, he's like, life happens. And he's like, there's a floor, absent some catastrophic activity, of 4 million home sales per year. That's because life happens. People don't, or can't elect not to pass away because the market is not where they want it to be. Steve contends that people who are unhappy in their marriage don't say we have a 3% rate, let's stay together. He said people don't make their family decisions based upon what rate they have. Life happens, and life happens causes business to happen. And we have a moral obligation to tell people that it's safe, okay, or at least to present it as we see it, not to allow them to interpret what's going on. And I mentioned the stat about foreclosures, which, he said the media is all about, hey, foreclosures have tripled in the past, 12 months or 18 months. And, he aptly pointed out, like, look, there was a moratorium in most states where you couldn't do a foreclosure. So, when you have, you're dividing by zero, it's really easy to triple it. And I think that we all know that there were virtually, foreclosures were banned by law in many of the jurisdictions. We need to be careful about what our clients are consuming as far as information. And if they knew the reality of what's going on, and I like to talk about, there is inventory, it just doesn't stay on the shelves, right? It's not disappearing. There's still 4 million properties that are selling. We need to be creative. We need to own the narrative. We need to control the conversation and not let, the consumers, direct that opinion on where the real estate market is. Anybody have any thoughts or comments about, what I just threw out there?
Rob, last week there was a post on a Facebook page that asked someone who was a buyer of real estate back in 1981 was to suddenly be a buyer again now. What do you think the greatest change would be for them that they would see? And my response, and it obviously was the response of several other people, was, wow, look at how low interest rates are, because they had been 16%, and now they're only, for argument's sake, 8%. So it's all a matter of perspective. And I think that this falls into that category of getting the information out to the market now.
And Robert, I think one of the cardinal sins that we as industry do is we educate ourselves and then we speak at people, right? And in other words, like, we talk 2 to 5 times more than they do instead of listening, right? And if you were to ask somebody, your perspective of, hey, you know what, back in 1981, when people were willing to buy and interest rates were at 19%, do you think that anybody bought houses? And do you think that somebody who bought a house in 1981 at 19% was glad that they did it? Now you take that person from 1981, you bring him to 2023, and they take a look at the market. The first thing they say is, oh my God, interest rates are so low, right? And I can say with absolute integrity, Robert, like, sometimes we as industry professionals, because this is our livelihood, we look at it more as a business than as a service to clients who need housing, right? I don't think, if somebody, wants to grow their family, do they sit down at the kitchen table and say, you know what, hey, Mary, we should probably delay, having a family because interest rates are high? No, they don't do that. It's absolutely ridiculous. Okay, so sometimes we get into our own head, and what we have that's in the back of our mind influences how people hear us.
Well, I would just add that I was one of those people who bought a house in 1981, with 18.75% mortgage, that in the time that I lived in that house, which was 6 or 7 years, I refinanced 3 times. And double, and the sale price of the house doubled over that time period.
And I'm gonna assume that most of us have been a home buyer ourselves at some point. And I want you to go back into your memory bank about when you bought your first home. I'm going to say that most of us were probably mortified and felt like, oh my God, this is, I have to do this for 30 years. I could barely make this payment, right? We stretched, we pushed ourselves to the limit. And then 2 years later, we're like, oh, this is a piece of cake, right? Because you got used to it. Your income went up. You got more experienced, and you're like, this is the best decision I ever made. But I would bet you there's really, really, really low percentage, like single digits, of people who buy their first home who don't have some level of anxiety and fear. Would you all agree with me?
Mm-hmm.
Right. And then that fear, but the courage to make that decision, I think, winds up being one of the best decisions that they ever made. I got into the game, I bought when it was 19%. I refinanced 3 times. My house doubled in 7. Like, you hear all of those stories, right? And, we're denying people the ability to do that because we're allowing somebody else to tell our story. Who wants somebody else to tell our story about the business that we live in? Nobody. We also talked about, oh, what do you think interest rates are going to do? I don't, they could go up, they could go down. I don't even think Jerome Powell knows what they're going to be because it's data dependent. But I don't think we should delay our decision based upon interest rates. And then you pause. They say, well, what do you mean? And then if they say, what do you mean? What would your comeback be? I'll ask, I'm seeing Robert on my screen and Eric, what would your comeback be? To somebody saying, well, what do you mean I shouldn't worry about the interest rates? Do we know how we're going to answer that? Do we know exactly what we're going to say when that question comes up? I would say this every single time. Hey, you know what, Robert? Let's take a look at it. If interest rates go up to 11% and you bought now at 8, how would you feel? And Robert, if interest rates now at 8% and in 2 years they go down to 4%, what would you do?
I'd refinance.
You'd refinance. And how would you feel about that?
I feel great.
Okay, so this is one of those rare times where you flip a coin, heads you win, tails you win. So what are you looking for? Do you know what I mean? Like that, to me, that just that has integrity. And if anybody wants to shoot holes in it, we're a group here together. This is not, public domain. What's your thoughts? Like, how can that not be a valuable conversation to have with our clients?
I think that conversation is a hell of a lot better than, marry the house, date the rate. Because I've struggled to explain to people, buy what you can comfortably afford at today's rates. And if the interest rates go up, as you mentioned, Rob, you won. And if the interest rates go down, you refinance. Housing prices will probably have gone up at that point and you still win, right? But I think the message needs to be, don't overstretch yourself either. Don't bank on the interest rates coming down anytime soon because we don't have a crystal ball. But if you can get them to buy something that they feel comfortable with at today's rates and you pose it in the way that you mentioned, Rob, I think that's a win.
No, so Emily, this is a great conversation to dive into. If somebody asks you, what do you think interest rates are going to do? How does anybody answer that question now?
They tell them that I don't have a crystal ball and that, hope that the rates will come down, but I can't guarantee that they will. And that's why I want them to buy something that they feel comfortable with the payments today, because if they come down, great, they refinance. And a lot of our lenders are offering a first free refi too, right? So you win. And if they go up, you still win, right? Because then you didn't put off buying a house to buy at a higher interest rate. To predict the future, right? And that's just me. I don't know if there's anyone else on this call that has a better way to do that without putting yourself in the firing line. But
so Emily, I think I've been prone, Rob's spreadsheet man, look at trying to analyze data. I've been prone to try to, have my own predictions and my own support for why I believe what I believe. Like for me, the fact that the spread between the 10-year treasury and the 30-year fixed rate is more than 1% higher than it historically is, which tells me that I think that the rates are going to move down to the mean. That means nothing to a buyer. It really doesn't. And, you know, Emily, to the point where you're like, you know, you don't want to buy more than you can afford. I think that that's honest advice that we should give everybody. But I also think that we should share with our buyers and our sellers that are going to be buyers that, you know what, I think every single person that, you know, bought their first home or probably even traded up or down had some anxiety about that transaction when they did it, because it's just a large financial transaction. And that needs to be part of the equation, but I think you need to look at what the motivation is for it. And then you need to talk about, you know, what happens if rates go back to 19%? You know, does that mean that you're never going to move out of your 2-bedroom condo, Emily? Well, that's ridiculous, Rob. We eventually need to move to a different school district, and we need to get an extra 2 bedrooms, right? So then why are we waiting that to try to time the interest rate market? Okay.
You make a good point on that one. Now, what about our downsizers, right? Our downsizers are like, oh, I'll just stay here, right? I've already, you know, paid X% off on my house, right? And other than the taxes, right, on somebody who's got a larger home, what's the other call on that? Because we've talked, I think, on team leader calls as well, that the play here might be to try to get some of these downsizers to get out of their house and downsize, so we have inventory for the next group of folks, right?
So I think a lot of the downsizers, though, Emily, are not, you know, there's a lot of cash and a lot of equity in the market, right?
Mm-hmm.
So if they say, you know, role play with me on a potential downsize candidate, what are the roadblocks that they're putting up for you, Emily, or what do you anticipate being the top 2 or 3?
So I think for me, it's been either A, interest rates, B, not knowing where their children are going to end up if they're still floating. And C, you know, some of them are still working, even though they're downsizing. So, you know, lack of inventory in the market in the areas that they want to be in. A lot of them want to stay, at least the folks I've worked with want to stay local. And so finding something for them locally has also been a challenge.
Yes.
It's Maurice. I just wanted to say something. I usually tell my buyers when they bring up the interest rate, I say, well, explain to me, what do you think the interest rate is? What does it mean? How does it affect you? And usually they don't have a particular, you know, a real answer. So what I tell them is, I say, you know, look at your amortization schedule, or, you know, and basically, in my opinion, the concept of the interest rate is just if they're going to pay their mortgage for 30 years. So I immediately answer that question, which is, it's most likely you're not going to pay your mortgage off, right? It would not be a good decision to pay your mortgage off, because at the end of the day, you put down, let's say you get a big chunk of change and you put down $100,000, your mortgage doesn't change. So then I always explain to them, okay, let's talk about some deductions with taxes. Then I explain to them, okay, look at your actual mortgage breakdown. What is really where the money goes? So like, let's say their mortgage payment is $1,000. Most likely, their principal and interest will probably be, let's say, $500. Break that down. Your interest payment for the first 1 year is, well, your principal payment of that $500 is probably $100. But does it really affect you? Because most people, when they, in my opinion, the people that I talk to, when my buyers, and I talk to them, they only worry about interest rates because they're told to worry about interest rate. I have a 5.8 interest rate on my condo, but my mortgage is still cheaper than anything that's out here. So if I was to basically worry about my interest rate, in my head, that means that I'm trying to pay off a mortgage that's already benefiting me, versus taking the money aside and trying to save it, extra money that would, you know, that would cost if I was to rent. So that would save it so that I can buy an investment property, right, or something like that.
So, Maurice, can I make a comment? And you can keep yourself unmuted, but my comment to you is that you've obviously thought about this a lot. You're obviously very intelligent and well thought out about it. But I think most people, you're going to lose them in the narrative there.
It can, but besides having the conversation with them, I usually have it draw, take out your pencil and piece of paper, and I usually give them a example of an amortization schedule. And this is just not a conversation that we have for 10 minutes, right? This is a buyer's consultation kind of conversation. We sit for an hour on a Zoom call and we explain numbers. I think that if people sat down and looked at my buyers, when we sit down and look at numbers, they understand, okay, well, it's not that important.
Right. So Maurice, I think I'm going to make a suggestion. Everybody has a different success formula. Okay. But you said, you spend an hour on a Zoom, and, if you're not getting the outcome that you want, or you're talking too much to try to get to where you need to be, maybe take it to an in-person meeting. And wouldn't it be nice if you can say with absolute confidence when you meet with somebody who's in your sphere or who's a client of yours, hey, the objective of today's meeting is to identify whether or not it makes sense for you to make the downsized move. Let's talk about what would be the benefits of doing that. You don't want to have the big yard. A lot of times people would say, I don't want to have to clean 3 rooms I'm sure you've all heard those reasons why people are thinking about moving. Okay, house is way too big to take care of. And in that instance, that's probably more important to a lot of people than what the interest rate is. Okay, having a house that's easier to manage, that's more functional for them to use. It's not always easy to find that product in this environment, but what's going to define us is how we differentiate ourselves in identifying those homes. Okay, it's one thing to say we're better than the competition, but it's another thing to actually do and perform. Okay, and I'm going to keep repeating the same things over and over again because I care about you, and I want you to be that person that's solution oriented and not thriving a commission check. So first identifying whether it makes sense for them to move. And if they're an analytical person, Maurice, I think you need to have that, or it's maybe I shouldn't say you need, but it's very helpful to have that knowledge in your back pocket. But to put that out for every particular conversation, I think is going to miss the majority of the people. And I don't know if anybody else has an opinion on that. And
Can I give a suggestion?
Yes.
Okay. You can only talk so much to a client, excuse me, before they, not believe you or think that you're just trying to oversell them. And that's because we're known to be used car salesmen. And that's what they think we're doing. So what I do is I try to explain the basics to them. And then I have a mortgage broker that I've been working with for 35 years. So I'll call Michelle and say, Michelle, would you call these folks and explain to these people what their options are? There's a buy down program. Maybe they can do an adjustable rate, or maybe they can, excuse me, get in at a better rate. And let her do her job explaining to those clients rather than you actually doing it. Just a suggestion.
Rob, let me jump in. Ron, very good point. And to Emily's point too, looking for a home as a real estate agent, I keep hearing the same thing. Just, buy what you can afford and get into something that you're comfortable, with. When I sit down and people ask me the rate, I avoid that like the plague. I don't really talk about rate. I talk about a payment. So when I pre-approve somebody, I'm going to talk about what their payments are. And when I say, are you comfortable with that payment? Yes, that I'm comfortable. That's where I want to be. Okay, at that point, here's what you can afford. Great. Here's your pre-approval letter. Go out and find a home. Then they're like, what's the rate? And I say, well, rates are in the range of, and the media and like everybody's saying on this call, if you ask somebody, oh, I don't want to buy a house because the interest rates are too high. Well, what does that mean? They just know that they want that 3% mortgage rate. Do they really know what it comes down to? Yeah, more of the savvy buyers do know what the payment increase is going to be with the higher rates. But again, some of them don't. And they just know that, no, rates are too high. I don't want to buy a home at these high interest rates. But but you just said you're comfortable making these payments. So I really just talk about the payments, and then they ask me later on what the rates are, and I'll tell them, I'll give them the range.
That's a
And
good
then
point.
Ron, to your point with your lender, which is a great point, let the lender do their job, because yeah, there are so many programs, and with these buy downs, that's the greatest thing, because if the rate's 7.5% on a 2-1 buy down, or even a 3-2-1 buy down, you can go down to 4.5 or 5.5 the first year. Then it goes up a point the second year. Then it goes up to the 7.5% for the rest of the term. And hopefully, listen, we all know that rates are going to come down at some point. When that is, we don't know, but we've been in this business long enough to see these cycles and see the rates are going to come down. And you know what? If they're in the buy downs, they get a low interest rates, and then hopefully in the first year or two, the rates will come down and they can refinance. And I heard somebody say that the lenders do offer some, like a free refi. Yeah, we do. We'll waive our lender fees for people, our past customers, and of course they have to pay title and escrows, but with fees, yeah, we'll get them back into the home and get them into a low rate. And you know what? Now they're comfortable and now they're happy, and you can refinance as many times as you want. So some good
This,
conversation
this
here.
is what I mean. See that Frank's a mortgage broker, so now he's explaining his programs. I'm already sold. So if I was a buyer and I was talking to Frank, I would go, okay, well, that sounds good. Put me in a program where I can save some money until the interest rates come down.
So many options.
Quick note, I was just reading something by NAR, sent me the news bulletins every day. And they were saying interest rates may go up to 8% by the end of the year, but in 2024, we're going to see decreases in the interest rates. Now, I don't know where they're getting their information, but it was a little bit of more of a positive news blast that they sent me. So I think we should brace ourselves for that. But again, I don't think it's our job really to sit down and explain penny for penny, interest rate for interest rate with our buyer. I think it needs to be explained by a mortgage broker like Frank was just explained. It makes more sense to have, a professional who knows what's going on in the industry more so than some of us agents do.
So I'm going to take us all out of the details, because belief, Ron, is that sometimes somebody's too smart for the situation, and you can blow a situation by being too analytical and too smart. Do you think that's possible to happen, Ron? Okay.
Rob,
Yes.
Yeah.
yeah, so I just want to mention to the agents, I feel like as I'm on the call, each of us have to learn how to adapt to our our client's personality type. Like if I'm talking to someone analytical, I go deep with the analytics. If I'm talking to someone that's creative and expressive, I spend a lot of time on the feeling side of things. Does it feel good to be here? Does it, can you see yourself living here? Things like that, because that person relates to that. So I think every agent has to learn how to be adaptable. Like if you're talking to analytics, you got to talk analytics. If you're talking to someone who's more of a feeling type of person, you got to be able to adapt to that. That's worked well for me in my career. Like I hear the different agents actually demonstrating how do you appeal to different personality types. Like I think it was Maurice who was doing the analyticals. Emily might have been doing more of the feeling and comparison. Those are all like objection handling techniques. We're not calling it that, but we're kind of working towards that. So you learn 4 different things, and then use those as your back pocket strategies, and then use all of them. Sometimes the person needs all 4 of them before they make the decision to actually buy or sell. So I just want the agents to be aware that it's up to you to kind of like present this information in different ways, because we're all essentially saying the same thing. Home ownership is a good idea, and I think that people also have to realize the rental market went up 30%. I've been doing some rentals. I've been supplementing my income that way. And I've had multiple offers on rentals, and I've actually listed my rentals at one price and actually rented it much higher. So it's I don't know if that's bad for the consumer, but I feel like they need to be aware that rentals are just as high as houses. So if it makes more sense to be in a house for the next 5 years and refinance and not pay the $200, $300 difference every month that you're going to pay for this rental that's inflated, I would make that argument for them.
So I think even beyond, like, some of the things that we're talking about here, Angie, are really, well crystallized points. But I think if we could even say, at the beginning of and I'm going to focus on, potential home sellers who might be frozen. And I'm going to repeat this credit goes to Steve Harney. He says, misinformation leads to concerns. Okay, so if you don't have the right information, people get concerned, right? Concern leads to fear. Fear turns to panic, and panic turns to paralysis, where people don't make a move. And that's what the sellers, that's the cycle the sellers are going through. And prolifically, he said, there's only one person who can take them out of that, and that's us. There's only one person who can take them out of that spiral of misinformation. And maybe we get into the habit of saying, when we talk to a prospective seller, you know, and let's say we get in and they say, hey, we might not be selling for the next year or 3, right? So, you know, Angie, the purpose of today's meeting is to just have a conversation, you know, about the pros and cons of, you know, making a decision to sell now, a year from now, 5 years from now. Let's talk about, you know, what are the top 3 reasons why you would consider selling your home, and let them tell you. And what are your 3 biggest concerns about, you know, taking that action now? And then you try to reconcile those and say, look, it's okay if we come to the conclusion that now is not the right time. I just want you to have full information so that you don't, you know, and maybe you don't say this to them, but you don't stay put out of fear, right? Because if you're afraid, our tendency is to do nothing, right? Instead of to take an action. And, you know, not selling your house in today's market is basically like rebuying your house, right? So would you rebuy your house if you didn't own it now, or would you buy a different one? And if you buy a different one, what would you be looking for? And then try to take them down that pathway and get them emotionally connected to where they're going. And if it's something that they can afford, you know, the details that Maurice are talking about for 87% or 93% of the people aren't going to matter, because they're more emotionally connected with the lifestyle where they're living, right? When somebody goes into the showroom to look at a new car, do you think that they're concerned about whether that car is 62,000 or 80,000, or do you think they're just concerned about how much do I need to put down and what's my monthly payment? What do you think their concern is at the car dealer, Angie?
It depends, you know, like, you know, I'm over 40, so I've purchased, like, you know, at least 6, 7 cars in my lifetime. So I know what it's like for me. But if I'm 21 again, or 22, or in my early 30s, and I haven't gone through that experience several times, then I care more about the experience. Do I get all the features that I want? I care about the payment after I know I have the car that I want already. Also, our first time home buyers, that's also true, but we got to protect them. You know, sometimes they look at 600,000 when they can really only afford 500,000, and you have to explain 600 goes to 750 sometimes. You know, so you have to, as an agent, you got to really prepare them for what the market is doing and whether or not they're capable of doing that in that category.
So, what kind of like, if you were to go and even say, hey, Angie, at the end of the meeting, you know, if it's okay, if I were to even share with you, I don't think making a move right now is the right decision. Is that okay if I share that with you? Like, they'd be like, well, who's going to be like, tell me it's not the time? Like, what salesperson is going to tell me not to buy? And I would tell you, to be honest with people, like, if it really doesn't make sense, you know, tell them, you know, it's probably not the right time for you to make the move now, Angie, because these are the reasons that you gave me, you know. And by the way, do you know anyone else I might be able to help? Right? If you say now's not the right time for you, and you stop trying to push a sale on somebody who doesn't really belong selling, is going to pay you back. It's going to give you big dividends and big yields.
Oh yes, for sure. I don't want I don't want the agents to believe that, you know, you should have commission breath. I don't. You know, I go in and I try to help people with problems and hierarchy these. So like I'll go in and I'll say, hey, this is an option, this is an option, this is an option. What feels best to you? And then there they pick what they feel is best, because they've been presented with options. You know, so they don't feel pigeonholed, or they don't feel like I'm doing just like I'm self-serving my own interests. I'm not. I'm waiting for them to make a decision, and then I proceed from there.
Yep.
Something that she just said. So I do come from a car background. Most people do concern themselves more with the actual monthly payment than they do the purchase price. When you normally go to a car dealer, and the last 10 years especially, they got a little bit smarter. And when you sit down in the finance box, they give you 4 payment options. The cheapest option normally will still include tire wear and some basic protection package. Then they give you the next extended warranty, then the premium extended warranty, then the total tire wheel premium. But even the small payment has a little something built in. And that way, even if you choose the smaller payment, the dealer's still upselling something. I just say that because with the interest rates right now, we have the buy down option. We have regular rates. Depending on how much money you put down, that fluctuates the payment a little bit. There's different methods. And when you do speak to someone, knowing what their budget is, it's going to make a difference to what they can afford. The prices are scary. The interest rates are scary. So something that was said earlier, we can't, if we try and sell them too much, they're just going to kind of push back. That's human nature. You can't sell somebody on something that they're not comfortable with. I think, Robert, you mentioned that. But if you can find out where they're comfortable, what that number is, and then work backwards. If their budget only allows so much, of course, they need that pre-approval. We need to know what their actual capabilities are and what they can afford to do. But then if you can get that number and find something to work backwards, you're finding a solution to the problem. That's just my thought. But the numbers game really does make a difference psychologically if you can get something to fit their payment that they need.
So Scott, you said the interest rates and the prices are scary.
Mhm.
Tell me what you mean by that.
Just because the last few years with the interest rates, when they were at their historic lows, which were historic, not normal, they should never have been that low for that long. It is what it is. People got stuck in their head that that's what normal was. So now, granted, people who were buying homes in the 80s, who do know the rates were high, they're more comfortable with the rate number, knowing that it could be worse. But this whole younger generation, we have three. We're working on 3 to 4 years now of people who haven't bought because they're too scared, or they think they can't afford it, or they really can't afford it. So that's why the market is holding pretty decent, because we do have so many buyers out there. But again, it comes back to what can they afford? The stair step model. If they might want a 3-bedroom, 2-bath, single-family home with a backyard, right? That's the American dream type thing. But maybe they have to realize they do have to start with a townhouse, and get into the townhouse now. We can show historically always that you'll build equity. So we get them into what they can afford right now. Listen, 3 to 5 years from now, historically, even if the market drops for some reason, it'll go back up. You're going to build equity. You're making payments. You'll get a return on your tax, at the end of the year. At the end of the day, you can show a value to, instead of renting, throwing away $30,000 of rent, that you'll actually have equity built in 5 years. We'll trade you up to that house. And if something comes up sooner or better, that works out better for them. But at least it's something financially stable and it gets them into the door.
I don't like to hear us using the word scary about pricing or interest rates, Scott. And I think if we have that in our head, I think that subconsciously comes across.
They're scared. I'm not scared, but some of the people.
But you said the interest rates are scary and the prices are scary, right?
Yeah. Yes.
Okay, you're presupposing they're scary for them, but they may not be.
Well, if they're not, then we're not having that hard of a conversation. And it's a conversation, like your favorite word. It's a conversation, and getting them to open up about what it is they're looking for and what they can do.
But let's get out of the nitty gritty, and this is also credit to Steve Harney, who said, he was talking to agents at one of the summits he was at, and people were telling him, what, when you get right down to it, he's like, people will move for emotional reasons. Has anybody had somebody move 2 towns over to get into a different school district? Or Steve was talking about, if somebody has a son that's in sports, they want to get him a scholarship, or they're just passionate about sports. If 2 towns over, the coach is a better football coach and gets them into a better college, parents will move, pay a higher interest rate, and move to a different town just so their kid can have a shot at a better scholarship playing football for a better coach. Is that something that is possible or you can see happening without going, wow, that's really crazy. When I was in high school, there was a guy that moved from Sayreville to Edison because this guy wanted to get a football scholarship. So the parents literally moved 15, 20 miles away to attend Edison High because he thought he'd have a better shot at a scholarship. If you have children that have different needs, people will move for those reasons. And if we're influenced by, thinking that they're going to be concerned about interest rates, we start talking about interest rates, guess what becomes a big concern?
Interest rates.
If you start talking about, prices have gone up a lot, and you think prices are going to go up or down, and you start having that conversation, price volatility becomes a concern, right? Well, what if I buy now and it's the top of the market? Sometimes I think we problems in an attempt to anticipate solving them. Scott, you mentioned the word conversation, and I think the conversation's about, the alternative. So if we, look at, and I think now I'm focused on a lot of the people that are frozen as homeowners. And that's the lens I want to look at it through now. And you can look at it through all different lenses, but if the conversations about, I'm not here to make a sale, I'm here to give you the information so that you can make the right decision. And if they knew and believe that, the conversation is going to go a lot better, right? And if they ask you, what do you think interest rates are doing? I'd say, I don't even think the chair of the Federal Reserve knows. If we put interest rates aside, let's talk about what and you just do that. Most of the time, you're probably not going to come back to that. And then maybe if you get to the payment and the payment's not affordable, I don't think you do it. Like, you don't want to put people in places where they can't afford their house. Okay. But all of us have gotten to the point where we've gotten a little bit out of our comfort zone to make that leap to get the property that's good for our family. Right. I don't think anybody ever went in and said, boy, this is going to be a piece of cake. Buying my first home, no worries. Right. We all stretched a little bit, unless there's somebody on the call whose parents bought them a house cash. But that's not the norm. So we all stretched and we took that chance. Okay. And asking them questions and as a home seller or homeowner looking to trade up or down, there's a reason why they'd want to trade up or down, and misinformation and fear is causing them to be paralyzed because we're not doing our job communicating the information to them, and I'm looking at you, Jay. If you can make, double platinum, gold, diamond, all the different awards by tricking people to sell, I would tell you don't do it, because it's not going to be a sustainable plan. The sustainable plan is talk to more people, find out who is right to be servicing them. Okay, don't take the shortcut. Figure out how to help.
Right. And no, recently, whatever, this week, somebody who's written 10 offers and haven't been able to get accepted because it's 5% down. We get an offer accepted. Okay. Can we have our friend come look at the house? And so it's like the friend perceives that I just want to sell them a house. It's a referral, right? And so the friend's in their ear telling them it's not a good time to buy. Okay. And I'm like, you're renting. It's always a good time to buy if you're renting. And so trying to get him over, I'm not here trying to feed you a line of bullshit. Okay. But the people who are predicting these things and making predictions that you're listening to have no clue what they're doing. Because if they could make predictions and had a crystal ball, they'd own an island and they wouldn't be talking to us, would they?
I wonder if the friend advisor owned a house or rented themselves.
They already do. They just bought one. So they're an expert.
So they bought a house and it's not right for the other person. The irony is overwhelming. But I think
I tried to talk to their 2-year-old son and say, look, the most important thing is that we get you to stop paying rent, okay, and get a roof over your head that your family owns, okay. I don't think that went over well.
In our area, you have people that are renting and spending at the minimum $2,500 a month. That's $30,000 a year down the tubes. And I think that is a valid point to just say, if they're complaining about the interest rates, just say, listen, you're spending $30,000 a year. To me, that is, that's not a good investment. Invest in yourself instead of investing in the landlord.
and stop listening to the non-professionals, because if the non-professionals knew anything, they'd own their own island. They don't have crystal balls. We don't have crystal balls. Okay. And yes, I have another buyer who says, oh, that's it. We're going to put it on hold. And I'm like, it doesn't really work putting it on hold. Prices are going to continue to go up. What if interest rates go up? Then our affordability equation goes down. And what are we not going to get? So I'm trying to explain to these, and it's not because I want to sell them a house, right? It's because it is what's in their best interest. And I know, because I visit my clients and I ask them, hey, how do you like your house? And they always say, I love my house. It was the best thing we ever did. So how do I get them over that fear factor that we're talking about here? That is the fear of the unknown, right? So how do I get them over to the other side where it is that they're feel safe and comfortable, I think is what you're alluding to, right? And that we have an obligation to try to convey that information, because it isn't in their best interest to keep renting. Is it? Do we know that for a fact?
Rob,
Right?
it's Denise. Can I add something that might provide some value? Hey, Jay,
Yeah.
you're a mortgage professional, and you have several good ones that you work with. I have no doubt in their old files, they can pull out what we used to do years ago, a comparison. And I'm just giving an example. Let's say somebody was paying $2,500 a month for rent, and now they're going to pay $2,500 a month, or maybe $3,000 for a mortgage payment. But with the tax break on that, the interest savings, what it actually means to the consumer, and that visual sometimes can ease that stress and make it a smoother conversation. I bet you that somebody's got that in one of their old files and can freshen it up for you. That might help. Just a thought, just sharing.
Well, again, but the whole thing is, if it's my professional, they think we're just trying to get them to buy a house, right?
Well, no, my point is,
do you understand what I mean? That even if I refer to,
absolutely,
oh, his friend comes and says, oh, they're all in it together. They just want you to buy a house.
No, Jay, what I mean is maybe your professional mortgage person can brand an example for you, and you could just share with them, hey, this is a general example that would ease your stress of what converting from a rental payment to a mortgage payment, and how it could benefit you and your family. Just throwing a thought out.
Right. I got you. And no, I'm sure Matt can.
I have no doubt. I hope that benefits someone, because it's kind of like, it's been a number of years since we've had to deal with all of this in the industry. And I know especially Matt would definitely have something like that he could rebrand to support you when you're out there meeting with your clients. Good luck.
So Jay and Denise, I think if we're over anxious, okay, what we're going to do is we're going to allow the misinformation and fear to freeze our upsizers, downsizers, first time buyers, everybody, right? In terms of them, I think we need to be asking some better questions, okay, that will help them to self-identify, what's the right decision for them to do. And when somebody says, I'm concerned about the interest rates, or I'm concerned about housing prices, right? What I would say to them is, can you tell me a little bit more, Jay? And that nosy person who's telling them now's not the right time to buy, can you tell me a little bit more? Why are you concerned about the housing prices? Oh, because they've gone up a lot. Is inflation, Denise, gone up? Let me ask you, Denise, do you think it costs more than 15% more to build a house now than it did 2 years ago?
Absolutely.
People are aware of what's going on with prices around them, right? If construction cost and the cost to build a home is going up, okay, the prices of properties competing with them will also be going up. Now, Denise, are you aware of what the unemployment rate is? And are you aware that employers are having a hard time finding employees? Do you think the general public knows that, employers are having a hard time finding help? And that when they go to the restaurant, half the seats are empty because they can't find a server? Does the public know that, or do you need to be a financial expert to understand that? What do you think, Jay?
The public probably knows that, yes.
Denise, do you think the public knows that there's a labor shortage?
Absolutely.
And Jay, do you think the public knows that there's something called inflation?
Pretty much, which is what I had suggested to Alex, that, listen, putting it off, what if interest rates go up, prices are still going to go up. So the equation for us is not going to get better if we wait, right?
And how much money were they putting down, Jay?
How much? 5%, I think, is what we got them to. So
Okay.
20
So-
grand,
so-
25 grand.
So I'd say, Jay, look I can't predict the future, and I'm not in any way representing this, but if you put down 5% on the house, for how much was the house? What's the price range?
450. 450.
450,000, you're putting down 25,000, right? If that house appreciates 5% a year, you're getting $25,000 of extra equity every single year. So you're doubling your down payment.
Rob.
Jay, you're doubling your down payment every year.
Again, they just come back with, oh, my friend just told me that you just want me to buy a house.
But Jay, you're genuine. You can say, look, you know what? Can I have permission to tell you if it doesn't make sense to buy a house, and say that with authenticity? Because Jay, I don't think you're a good liar. So if you say that to them with every ounce in your soul, if it's not the right time to buy a house, Jay, do I have permission to share that with you? Yes. Okay. So I just want to go through what's going on, and I think the public is eminently aware that there's a labor shortage. So if there's a housing shortage, there's unemployment under 3%, inflation's 5 to 8%. Okay, if your house goes up just 5%, you're doubling your down payment every single year. You're paying the balance down, and you're getting a tax deduction on your home. And on top of that, Jay, what happens if interest rates happen to decline in the future? You're going to refinance. And if you refinance, you're pretty glad you did. And if rates continue to go up 1% a year for the next 12 years and they go up to 19%, how would you feel about buying now at an 8% interest rate?
Well, I mean, I think you hit the nail on the head, Rob. I have to ask better questions and wait for the answers, right?
Right. And
so that they realize it. So I don't come off like I'm trying to sell them on this thing that they should do yesterday, not tomorrow, not a week from now. They should have done it yesterday.
You know what I love about like that homeowner who's telling the other person, I don't want you to join the elite class of homeowners, right? I would ask him, are you happy that you bought a home?
You're right.
And what do you like best about owning your own home? To the guy, and then he's going to be like an ass telling him, don't buy a house.
That's true. It's kind of
okay,
true.
but instead and I don't know if Maurice is still on, but sometimes we are so analytical and we're so prepared that we just want to vomit information on them, and I don't think that that's the right solution to building rapport and taking them out of fear. Okay. Maurice, if you're still on, you're taking you're taking the 3 to 7% of the people that are hyper analytical, and you're applying that across, you're spreading that like butter across the whole piece of bread. But that's only one bite of the slice of bread, the people that want that information. Okay. And the other 93%, you're just getting them confused. And when they're confused, they're going to withdraw from making rational decisions, in my opinion.
I can understand that. That has not been my experience, but I can tell you, giving them some sort of information. Obviously, we say I'm not a professional, but maybe this is what you're looking for when you talk to the professional. Maybe these are the questions you might want to ask. Look, I have lenders that, first of all, I used to be a lender, so I know a lot of information when it comes to lending. I tell them, of course, I used to be a lender, but I want you to talk to the money guy, because his program or his process might be a little bit different. I don't dig too deep into the lending aspect of it, because they have the lender. I never go in their lane, but they need, I think that what you're saying right now is you're not giving buyers enough credit, because they're watching TV, they're watching YouTube. And If they feel the need not to say anything to me, well, who are they talking to? They're talking to their cousin that doesn't know anything. So give them enough information so that they feel like they can ask you questions, even if they feel like the question that they're asking might make them feel like a fool. I tell them there's no stupid questions. If I can't find the answer, then ask the professional. Obviously, still ask the professional, but talk to me. I don't, my buyers, if how can I say this the right way? My buyers and sellers, every single one of them, we're friends now. And every single one of them, they invited me to their house multiple times. I've even been to funerals because you take the time to, have a conversation with them. I think that telling them that, what you're saying is as far as their brain cannot comprehend what we're talking about and they might get confused. Well, I always, after my statement, I always say, does that make sense to you? Or should I explain it a different way? If they're not getting the information from you, they're talking to their cousin who knows nothing about the industry. And it's our job for me to direct them and maybe answer the questions that I can answer and direct them to where they need to go. But if they feel as though the questions that they're asking me, I'm making them feel uncomfortable, then they're not going to answer it. They're not going to ask it. Then what they're going to do is they're going to sit at the table, the closing table. They're going to look at everything that they're signing, and they're going to feel uncomfortable about signing it. That's my opinion.
Difficulty dropped off for a second. Can you hear me, Maurice? Or Robert,
Of course.
can you hear me?
Yes, you're here. You're back.
Hello?
Yes, you're
Okay.
back.
So,
We can hear you.
thank you, Maurice. In conclusion, I just want to say that the first person that we need to convince is ourselves. And if we commit to being, transparent and honest with people, I think that transparency will cause more people to identify that it's right for them to make the move and not try to figure out ways to induce them if it doesn't make sense. There's plenty of people that it makes sense for them to take action now, and we need to control the narrative. We have a moral obligation to control the narrative to the people that we're talking to. Okay, the people that, if somebody was to put on a piece of paper, hey, who's your go-to person for questions on real estate? If your name appears there, you have an obligation to be able to answer all these questions and give them the best advice. And if you talk to 10 people, if only 2 people, it makes sense for them to do it, then talk to 20 more people and you'll have your transactions. Don't try to figure out a way to, convince 3 and 4 to make a decision that's not in their best interest, because I believe most people, even if they wanted to, aren't very good at inflating or conflating the truth. And that, we say, if it's okay, if it's not right for you, I want to be able to have that ability to share that with you. And then you take that action and you talk to more people, you demystify what's out there. And I think it makes sense for a lot of people. And, Jay, I don't know if you're still on, but that person who's in a home telling somebody else it's not the right time to buy is going to be exposed as a huge hypocrite. Even if his own interest is, well, I got a better deal because I bought it when prices were a little bit lower and rates were lower.
Right.
He's not the expert. Okay. He should not be controlling that narrative. And we don't need to be nasty, snarky, or anything, dismissive of him. We just need to put our information out there. Okay. And in those cases where you have that person that's advising them, when you ask them the questions and they're like, oh yeah, it really does make sense, right? Instead of, you might pivot from your client and ask those questions where he's putting up the barriers to the know-it-all homeowners, telling him that now is not the right time to buy. Say, hey, Mark, if they bought now and put $25,000 down and there's 5% appreciation, their money doubled every year, is that a good investment? Right? And saying, Mark, if the interest rates went up 1% a year for the next 20 years, do you think that Jay would be glad he bought today? Absolutely. And Mark, what if interest rates went down to 4%? What do you think Jay should do? Oh, he should refinance. Sounds like either way you win, Jay. Right? Instead of combating the person, And Maurice, I give you a lot of credit for, being able to convert a lot of people to analytical. That's a very good talent. But for most of us, we're just going to have to, read the people and try to play into what's most important to them, in their mind. And most of the time this is a house, not just an investment. If I can afford it and it's not a crazy thing to do, I'm going to do it. When people buy a boat or people buy an expensive car, that's not a very good investment. Okay, think about if we were car salesmen. We have to sell something that depreciates the second it walks off the lot or drives off the lot. Okay, we're selling something that's going to appreciate. That's a really good investment. Thank God that we have this job that we can help people make probably the best investment of their life. So I'll stay on for a few minutes if you have any questions, but I thank you all for participating. Sorry about the little technical glitch I had. Anybody have any questions I can help you with before we wrap up?
Yeah, can you explain what you were talking about as far as new construction? And you're talking about the other homes trying to compete with them by raising their prices.
So Maurice, if the cost to build another home is going up, right, because of inflation, and labor costs are going up, if I have a house that is 400,000 and it used to be a new construction house was 425, now that house goes up to 500 because of inflation. Somebody looking at the two is going to pay me more for mine because the competition has gone up higher. Like an appraiser is going to look at it and say that brand new house is worth 500, but it's 2 years old. Maybe we're going to take off 5% because it's not new construction. So the resale house is now worth 475 instead of 4.25. It's basically the comparison approach, and appraisers do that when they do the sales comparison approach. Okay,
but if you're talking about a buyer, are they, are they looking at it as, or are we supposed to explain to them as a sales comparison approach? Or are they looking at it as far as, hey, in this house, somebody sat on the toilet, and in this house, nobody sat on the toilet. So why am I going to pay more money when somebody has lived there? For instance, I can give you an example. I look at Arizona's Tucson's market because whatever. Their properties that are new construction, nobody has lived them, is the same exact value as the properties or list price as the properties that are on the market where somebody's lived there. I can't understand the concept of how they can be competitive, because if I'm going to look at a property, regardless if, let's say, the property of somebody lived there might be bigger, well, I kind of want to, to have everything new. If it's in the same ballpark.
Maurice, that's one of the cardinal sins where you're applying your preference to what consumers do. My comment was not to compare new to the decision of making whether new construction worth 5,000 or 25,000 more. But my comment was just to say that if the cost to replicate a product is going up, cost of the existing products that are competing with it is going to go up by definition. Right, because there's going to be some differential, or maybe in Phoenix there's no differential, which means that if the cost of building a new home goes higher, then the cost of a resale is likely to go higher. Okay, but these are little pieces that you're asking questions as opposed to making it to be a big narrative. It'd be like saying, hey, Maurice, if the cost to add another home in Freehold, New Jersey increases by 15% because of material and labor costs, what do you think that's going to do to the existing homes in the neighborhood? Right?
Well, it's probably going to take you, obviously it's going to make them go up, but if you're talking about just appraisal value, that's what you're talking about?
Maurice, you're going too deep. This is a question for a home buyer or a home seller. Okay, it's not to go into, I'm not going to give advanced, unless they want it, but it's just a simple comparison. If the cost to create a product goes up, right, the cost to add a new product into the market goes up, what do you think that's going to do with the properties that are similar but maybe a couple of years older? They're also going to go up. And if there's very low unemployment and there's a housing shortage, I don't see that there could be a reasonable expectation that the housing market is going to go negative or crash. I think it's like we were going at, pretend you're driving down the highway. We're going at 5% inflation most of the time, home appreciation, and then we went up to 15%. Now we just slowed back down to 8% appreciation or even 5%. We're still moving forward. Okay, we're just not moving forward at the same pace. If we can just get a little bit more comfortable helping demystify the consumers faced with, because we're in the business, have not just a financial interest in doing that, but we have a higher interest, which is we have a moral duty to share with the people that would put our name down as their real estate expert, to be able to communicate what the conditions of the market are and help identify whether it makes sense for them to transact in this market. And I think too many people in the industry, they talk to 10 people, and if they need to make 3 sales, they try to make the third person who doesn't make sense. They try to convince them to do a sale instead of call another 30 people and get 6 sales, because if 2 out of 10, it makes sense. So that's just a mindset shift that I have. And if you're not fully convinced yourself, or if you have some concern, oh, I wouldn't buy now because interest rates are high, or I wouldn't buy now because prices have gone up too much, that subliminally in your subconscious is going to come across, and it's going to be a challenge, and it's going to hurt people who really should be making decisions now. Questions before we wrap it up? Well, I appreciate all your participation, and I hope you got 1 or 2 things that you can take and apply and serve your clients and serve the people that put you down as their real estate advisor, professional go-to person. Have a great weekend, everybody.